Welcome to the Captain's Blog. I'm David McDonough, Senior Vice President and founder of Flagship Wealth, powered by Trilogy. On this blog, we try to take what's unnecessarily complicated back here on Wall Street and make it understandable to you on Main Street. Let's cut right to the chase. Down 2% last week. Friday, global IT shutdown. Let's face it, folks, there were overcrowded trades. Everybody going in one direction. Profit taking was overdue. So the bears took control last week. Did the bulls take it back and get us back in a positive territory? Here's your week in review. As of this taping, it is a resounding no. The bears still took control. Again, those that bet the market will go down. Down 2% this week. It was all about earnings. Earnings came in with tech companies just as expected. Now, I've talked on previous blogs about buying the rumor and sell the news. The rumor is the earnings were going to be great. Well, the news came in and earnings were just okay. As a result, with a market priced to perfection in certain sectors out there, again, names that you can't pronounce, going astronomically higher each and every week, profit taking was overdue. And I'll say this again, it is also healthy. Doesn't feel great, but if you rebalanced, if you spread your assets out in what we like to call an asset allocation, the pain that you felt is less than the pain if you were a FOMO investor and were just chasing one or two names. Because as of this taping, they're down 20, 30, 40% from a high just 2-3 weeks ago. Here's what to look for next week. Next week, it's all going to be about earnings, and more importantly is the Fed. The Fed meets on Tuesday and Wednesday. We believe they're going to come out and say they're still data dependent, but our guess is they start cutting rates in September. Again, folks, why are they cutting rates? Because the economy is slowing down. Your balance sheets are getting hurt. You're feeling the pain that they wanted you to feel by keeping interest rates higher for longer. So again, it'll be welcome news that they're cutting rates. But remember, they're doing it because the economy is slowing down. Again, I want you to be proactive in your portfolios, continue to rebalance, and do not, I repeat, do not chase some of those favorite sectors. And here's your personal finance tip of the week. I just use the term asset allocation. What does it mean? Again, we try to make what's uncomplicated on Wall Street uncomplicated to you. It just means have your assets diversified. Have your portfolios diversified. Be there before the crowd gets there. Now, 2, 3, 4 weeks ago, I was talking about getting into small company value and staying away from chasing those growth names. My crystal ball isn't a lot better than yours, but when everybody on Main Street is doing something, you should do the opposite. Again, stay diversified. Continue to rebalance before the market does it for you. So thanks again for checking in. We'll see you next week on the Captain's Blog.